If you have everything all pushed into one spot, like let's say that you have a stock brokerage account and you invest all in tech, or let's say you were invested all in travel when COVID started, you would have been hard hit. But if you had diversified your portfolio, you would have had less impact from the changes in the economy that were impacted by COVID. The same goes for investing.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB & Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 292. Is the United States the best place to invest in real estate? What if you want to find opportunities in other countries? Is that even possible? What about investors from other countries who want to invest in the United States? What are their options? My guest today helps her clients overcome obstacles and navigate businesses and investments across borders so they are able to invest, live, work, and play anywhere. Lauren Cohen is also a serial entrepreneur, international lawyer, realtor, and cross-border expert. Lauren, welcome to the show.
Thank you. It's a pleasure to be here, Brian.
Why don't we start with you explaining what it means to be an international investor and the types of clients that you work with, Lauren?
Being an international investor is such an open-ended definition, I suppose. You can be an international investor and invest in property, invest in business, invest in share stocks and bonds, for example, of international companies, and you can be considered an international investor. For my purposes, for the most part, international investors are people or companies or people's companies that are investing in real estate and business in countries other than their own. So they're going across borders. It can be into the US, into Canada. I'm from Canada originally, as I mentioned, into the US and or Canada, and or into any other country in the world, or from any other country in the world. So there's really no end to what could qualify you to be an international investor. I have my own podcast called Investing Across Borders, and that pretty much sums it up. If you invest across borders, which could be business or real estate or anything else, you're an international investor.
There's two directions. There's people in the United States who might invest elsewhere, and then people from other countries who want to invest here. Let's start with people who are in the United States that might want to invest across borders. First of all, why would they want to do that? And what are the things they need to take into consideration if they decide to do so?
Why would people want to diversify their portfolio? It's the same question. If you have everything all pushed into one spot, like let's say that you have a stock brokerage account and you invest all in tech, okay? Or let's say you were invested all in travel when COVID started. You would have been hard hit. But if you had diversified your portfolio, you would have had less impact from the changes in the economy that were impacted by COVID. The same goes for investing. So if we were to invest exclusively in our home country, we're not diversifying. And certainly, if nothing else, this whole pandemic has taught us that diversification is the key to success. And if we had investments in multiple countries, the impact on our investment in one country would be different than in another. For example, Canada, where I'm from, Ontario, is shut down. Toronto, shut down. Okay? It hasn't changed the fact that the real estate market is insane beyond anything. But certainly if your business may have been impacted or probably has been impacted by the shutdown and the lockdown and so on. If your business had investment interests or clients outside of Canada, in the US and other countries, for example, then you would have had a diversified portfolio and been less impacted. The same thing goes for real estate. So people invest in multiple countries, particularly from North America, from the US into other countries, because they want to diversify their portfolio and have more options and more flexibility. Additionally, some people now, especially because of the pandemic, have realized that they want to have potential options to move. and relocate. And those options open up the more investments that you have in alternative countries.
If someone does decide that they have opportunities outside of the United States they want to invest in, what are some of the considerations that they need to take into account?
Taxes. It's always going to be the number one concern, no matter what you're doing. As soon as you invest across borders, whatever the border may be, you need to look at the tax implications of that. And that doesn't mean just looking at the tax implications in your home country, but also the tax implications in the country that you're investing in. And is there a tax treaty between the countries? And how does that impact you when you file taxes? And, when you have cash flow coming in, you certainly don't want to be giving away all of that cash flow to the IRS or any other regulatory, tax revenue agency. You want to make the money so you can keep some of it. Otherwise, kind of what's the point? So taxes, legal, structure, partners, boots on the ground. Who do you have there? It's really important to have a team that's going to be able to manage your properties, let's say their properties, manage your business, manage your investments in the destination country before you actually do the investment. If maybe you're investing through a syndicate, how does that look? How does that impact you? So it's all about strategy at the end of the day, Brian. And I think that that's why so many clients work with me, because I don't start them down the investment path until we have the proper structure, that cross-border tax advice, whatever that border might be. How does this impact you? What is your short-term and long-term goals? What are they? How do they look? How do you achieve them? Because if you're eventually looking to potentially move, your short-term goals will change, because you're not going to be just looking to invest. You have to address, or you have to redirect your short-term goals to achieve those long-term goals. Somebody that's just saying, I just want to invest in 20 countries, okay, let's say for argument's sake, is going to be a completely different animal, completely different strategy than somebody that says, I want to invest in Mexico because I want to have a second home there. That's a completely different strategy, and it needs to start from the beginning, not at the 11th hour when you say, okay, I'm ready to move. And the same goes for people coming into the US, which I know is part two, but yes. It's all about having that comprehensive strategy that looks at all of the elements of what you're doing.
On the whole, what do you usually experience with taxes? Are you paying them both in the United States and the country that you're investing in?
No, hopefully not. So for obvious reasons, I am from Canada and I'm living in the US and I'm a dual citizen. So for obvious reasons, there's more cross-border between Canada and the US than any other two countries that I'm dealing with. And certainly being in Florida, tons and tons, for obvious reasons, of Canadians invest in Florida. So I bring in my cross-border tax advisor. I am not the cross-border tax advisor. I bring in an expert that is licensed in both countries. He's a CPA in Canada. He's a tax expert in the US, an enrolled agent. And he comes in, or I have three people, but my main guy comes in and he gives general introductory advice to help them to structure the business properly. I then bring in my asset protection / structure lawyers to set up the structure based on the tax advice. So everything is streamlined and seamless. But that tax advice is not going to be the same if you're staying in Canada or staying in the US versus moving. So again, it's all about having that kind of holistic strategy from the beginning.
Does one typically find themselves paying double tax, or do you usually help them find ways around that?
I'm not a tax expert and I'm not giving tax advice, but generally if you set up your structure properly and have the right entities. So what this means is way too many people that are investing into the US read something on the internet and go ahead and set up a limited liability company, an LLC. That is not the way to do it necessarily. It might work for people from some countries, but it's not going to work for people from other countries. And so if you do that, you could end up potentially being subject to double taxation because you didn't get the right advice. But if you set up the right structure at the beginning, okay, which might be a limited partnership with sub companies. So you need kind of a holding company structure. So let's say it's a limited partnership or a C Corp or something. And then you have the individual entities that own the individual properties or the individual businesses. that is going to prevent you or help you to not have to be subject to this double taxation, because one country's taxing authority will credit you for the taxes paid in the other country. This will also be impacted by, do you take the money out or do you just reinvest it? Would you leave it in the country where you're investing, or do you take it back to the country where you're from? And then comes, of course, then there's the 1031 exchange and all of those issues. So it's, again, a complicated, holistic strategy is the only way to go. And if you don't do that, you will end up, like I have a guy now who is still resisting working on the right structure, because he set up something years ago and he paid $100,000 in probably avoidable tax last year to the Canada Revenue Agency. And he just doesn't listen. And there's going to be clients like that. And if he had listened, okay, I didn't know him then, but if he had listened last year when he came to me, he probably would have saved himself $50,000 this year on filing. But you can lead a horse to water, right?
The message here that's coming through loud and clear is, if you are going to invest internationally, have some experts that can advise you on how to do it in such a way that you're not going to overpay on taxes or other types of structural issues.
You know, Brian, what I find to be a very common theme, and I'm sure you see this too, is, first of all, people are afraid of lawyers. Lawyers charge too much, they take advantage, they do this, they do that. Okay, so I am a lawyer. I'm actually a lawyer in Ontario and in the States, and I'm a realtor, as you know, but I don't consider myself a lawyer in that sense. I want to prevent you or help you avoid paying all these taxes. So some people would rather to have to pay this huge tax bill than to pay 10 or 20,000 to get the right structure in place, because it's just like insurance, right? It's all about mindset. So if you drive your car without insurance, is that a smart plan? No, it's the same concept. If you go ahead and just, invest individually or set up an LLC without proper guidance, or just don't get the team in place, and you need to have that one trusted advisor. I have a client right now. She's been struggling through different lawyers for 7 months, having every single lawyer tell her something different. My advice to her was, you need to choose one person. Doesn't matter if it's a lawyer, an accountant, but it has to be a professional that understands what your goals are and is able to be there to have your back. Because I don't know all the answers, but I know how to get them.
Yeah, it really seems like if you're going to be sophisticated enough to invest internationally, you have to also invest in the right team that can help you understand how to do it correctly.
It's so worth it to spend a little bit now to save a lot later. But when you're starting out, it's challenging because your budget is small and you want to see the return. So you're like, oh, I'll just wait till I get my first cash flow going. No, don't do that, please. Even if we have to scale back, let me get you set up properly so you don't end up paying them.
What is some of the incorrect advice you see floating out there on the internet that people read and think they understand and know how to do it correctly, and then you have to try to convince them that there's a better way to do it?
The biggest one is always going to be the LLC, okay? Setting up an LLC, because everybody thinks that if they're going to invest in real estate and property, they should set up an LLC. An LLC needs to be the owner and da-da-da. Generally speaking, that's right. But who owns the LLC is the important thing, because, and is the LLC going to be recognized as a taxable entity or a taxed entity in your home country? So that's a really common misnomer. The other one is that it's okay to set up, if you're just, investing in a property for vacation purposes or something, go set it up individually. You're not going to have any tax implications. You don't have to file in your home country. For US residents, it's no big deal for me to invest in Canada. I don't need to have the right structure. I don't need any structure. I have a friend. She lives in Toronto, whatever. Okay. And she did it this way, so I can do it this way. I think that the very common misnomers are that the problem is that there's so much information on the internet and you don't know. It's kind of like when the dog bites your kid and the kid has a rash, and the one says he's going to die tomorrow and the other one says just put some Neosporin, right? It's all extremes. And if you're looking, you can find the answer that you want to find, but it doesn't mean it's the right answer. The most important advice that I can give is to, again, find one person, one professional that you trust that can help you through the process, jump through those hoops so that you don't have to jump through them. Make sure that you're not looking for the top provider that paid the most to get to the top of the Google AdWords or whatever it is when in your Google search, because they're not necessarily the best. They just had the deepest pockets.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. What opportunities do you see your clients typically investing in when they're investing from the United States, investing internationally? What often do they gravitate toward?
A lot of them like to invest in vacation, Airbnb, vacation type homes, a fractional ownership sometimes, especially when they're investing in Europe. I have one client that's setting up a whole development in Honduras very inexpensively because Honduras, the land is pretty inexpensive. It really depends on where they're investing and what their goals are. I think that these days, a lot of people are looking outside of the US as, again, opportunities for flexibility because this pandemic has not gone away. And if, God forbid, another stream comes to the US, they want options and they want the ability. Money, I always say money doesn't buy happiness, but it buys flexibility and options. And those are the things that do buy happiness. So because you need that flexibility so you're not stuck. And I think that that's what they're investing in right now. Just looking at where's my dollar going to go the furthest, but yet that's stable enough that it's not going to be at huge risk. Because right now, like for example, in India, real estate is inexpensive, but not a lot of people want to invest in real estate in India right now, or Brazil, or Colombia, or other places because of the pandemic and the numbers being so high. And we just don't know how that's going to influence the market. So if you have, though, the right advisors locally, which my team brings in, then they can help you so that you don't have these challenges, or at least you have a secure and opportunity not to, as you can.
So the pandemic has really skewed a lot of international investing as to where people might want to invest or not invest. But are there particular countries or areas where you see a lot of investment happening because the savvy international investor realizes that there's a lot of opportunity and growth there?
I think Mexico would be one of those for sure. And maybe Portugal. And the reason for Portugal is, and I have some amazing colleagues in Portugal. I work with eXp Realty and we expanded into Portugal in like December. And it's been amazing because they have a golden visa there, which allows you to live and work there. And the numbers are low and it's a nice economy. It's it's not as crazy as Brazil, for example, and most people speak English. So, and the real estate isn't as expensive as it is here. And it's a pretty stable place. So a lot of people are looking to invest in Portugal. Some other parts of Europe where the numbers are down. Again, right now, what's driving a lot of investment is definitely the pandemic numbers, for sure. Australia is another place. I have a new partner in Australia, and there's a lot of interest in investing there. So a lot of coastal properties and so on. So I think it really just depends on what your goals are. And then what I do with my clients that like, obviously some of my clients are like, I want to get a visa and move to the US. Okay, well then obviously they have to invest in the US. But if they're in the US or Canada or wherever, and they're looking to create an investment portfolio, an international investment portfolio, we're going to look at what their goals are. And their goals are, again, are going to dictate where. Because if their goals are, let's say that, again, they want to move, it's going to be different than if they want this broad portfolio. Multifamily, what's the goal with multifamily? Do you want cash flow? Do you want upside? Just like investing in the US, it's just on a grander scale.
And are investors able to find similar cash flow, similar returns internationally?
Sometimes. It's really all depends. Like it definitely depends. For example, in Toronto, your cash flow numbers, because the prices are so high, are low, but your upside is high because you're always going to make a lot of money. Much more than you are, for example, in Detroit, where you might have decent cash flow, but your upside is kind of non-existent because the market isn't really going, like, certainly not like Toronto. In South Florida, the market's never been like this since I've been here. And so it's a balance here of cash flow, because there's always going to be cash flow because there's always demand in Florida, and then potential upside because the market is so high now, we don't know how much upside there's going to be.
Can you take us through the process that you would take an international investor through? Someone from the United States comes to you and says, I want to invest in Portugal or Australia or Mexico. What are the basic steps you take them through and the questions you would ask them?
I think I may have shared my gift with you. And if not, Brian, please ask me, because my gift is How to Invest in Real Estate Across Borders. And it's an ebook, and it talks about these steps. And essentially, there's 8 steps to invest in real estate across borders. And the 8th step, which really should be the first step, is assembling the team. Okay. So, but that, if you hire me, for example, I'm assembling the team with you. The most important step, again, is that tax advice, getting that tax advice, figuring out what you want to invest in, where you want to invest, what your short and long-term goals are. How do you want them to play out? What is your timeline? Do you want to partner with somebody? Do you have capital? Do you need capital? So it's all of these elements that go into the process of deciding and developing a strategy, because I'm not going to, it's not one size fits all. And just because you say you want to invest in Portugal, I have a gentleman now who wants his dad to retire to Portugal. So I connected him with my Portugal partner, and they're looking at property for his dad to retire. That's a different business model than if the guy who's young, he's in his 20s, wanted to invest for his own portfolio, because, his dad retiring means you want some stable opportunity that he can live in. You're not going to be renting it. You're not going to be Airbnb-ing it and all of that kind of thing. So we have to go through all of these steps to figure out the strategy that makes sense, and setting up your structure and making sure that you're covered tax-wise are 2 of the most important first steps that happen.
You mentioned your gift, the book that you wrote. If you want to go ahead and tell our listeners how they would access that.
Yes, I did write a book. My book is actually called Finding Your Silver Lining in the Business Immigration Process. But as I mentioned, I have a podcast, but I will put the link to the gift in the chat, and you can share it in the notes. Absolutely. You can also find this on my website, which is ecouncelglobal.com, ECOUNCIL global.com. And I also have a website called Immigrate Through Real Estate. Imagine that. So this book is mainly about investing into the US, but most of these steps are equally applicable no matter where you're investing and from where. It's a great little tool, and it will give you a feel for me and my team and how we operate. And I mean, you're in a perfect spot over there in Michigan. I have a lot of colleagues in Michigan with people investing from Ontario into Michigan. It's a hot spot for sure.
Before we move on to the other side of the equation, people investing from out of the country, investing in the United States, is there anything else on this topic, people in the United States who want to invest internationally?
Americans think that because they have an American company, American Corp, whatever it is, that they don't have to worry about, they just use that to invest wherever they're investing. And that's not the way to do it. And as I did mention, and I'll just reiterate, it's really important to have boots on the ground in the country you're investing into, so that you don't have to be there physically, and having the team that you can trust in that country is of the utmost importance.
Let's switch over to people from outside of the United States who want to invest in the United States. Is it the exact same thing, only mirror image, or are there a lot of other considerations?
So in this regard, it's going to depend on if their goal is to move here or not. So 80% of my clients are moving to the US in some way, shape, or form. Now, they may not even be full-time moving. They may be moving to be snowbirds. They may be just moving to have options. They may be moving temporarily. But when you want to move to the US, you have to set up a structure that's going to pave the path for that to happen. And so it's really important, again, to make sure that you develop this strategy and structure from the get-go.
Let's focus on those people who might be considering moving to the United States and investing here. What is the strategy that you would suggest?
Well, if they're moving here, then we have to set up the proper structure, start them investing, create an investment path that can lead to a visa, figure out if their real estate investments are going to be the basis for that visa. If so, we're going to have to invest differently because you can't buy a couple of single family homes and think you're going to qualify for a visa, no matter how expensive they might be. We have to then figure out, your timeline. And it's pretty similar, but the goals are going to be different. So the visa is going to dictate. And right now, everybody is on an expedited timeline.
So you said a couple of things there that I want to follow up on. Am I to assume from what you said that if someone internationally wants to invest in the United States and get a visa, that actually investing in real estate here will help them get that visa?
It's a possibility. You can't buy single family homes or flip properties and expect to get a visa. But if you follow my method, and I do have a webinar, actually an evergreen webinar that I offer, it's free, to learn how to take real estate investments and provide a path to a visa through those real estate investments. But it can't be a hobby. It can't be passive. You have to be actively involved. Again, this term boots on the ground, you need to have your boots on the ground, running a business, hiring people, bringing in income. It has to be a substantial investment in a non-marginal business. And in real estate, substantiality is that much higher because you're getting a tangible asset. So you're looking at an out-of-pocket investment of about $250,000 out of pocket, and the investment amount is going to be probably over $1 million. You can finance the other part of it. So, and generally I prefer commercial property than to residential, but if you're doing a bunch of Airbnbs, they might qualify. So we have to look at each individual investment and each individual investor. The other thing that I've developed is something I call the super cool mixed use model. And the super cool mixed use model, it's actually a pretty interesting dynamic business model that involves residential and retreat/event space and potentially retail within one building, within one structure. And there is an amazing path to multiple streams of income and a visa through this model that I love.
That sounds like people who are interested in that should listen to your podcast.
Well, not my podcast. It's a webinar that we did that's on YouTube about this super cool mixed use model.
You mentioned that anyone who's waiting for a visa right now is on an expedited schedule.
No, they think they're on an expedited schedule. I'm sorry to correct you. In their head, they're on an expedited schedule. In reality, the schedule is delayed because a lot of consulates are open. But what I'm saying is that many people are driven, motivated to make the move now, and they want to do it yesterday, and they can't because it takes time.
We have a lot of listeners from all around the world. I know one of the reasons I wanted to have you on the show is because some of them have contacted me and said, hey, can you have a topic where you talk about people from out of the United States investing in the United States? Now, these are people who aren't necessarily considering moving here, but just want to invest in the United States real estate market. What strategies and considerations should they have when investing from out of the country?
It's 8 steps to invest in real estate across borders and 10 steps to immigrate through real estate. So only 2 of the steps are different. And that would be your visa petition and getting the visa. Everything else is the same, from the business plan to the cross-border tax advice to the legal structure to the joint venture partners. Everything is the same the ultimate goals are different. And so you're going to have to drive your decisions on some of those steps differently because of your goals. But at the end of the day, 8 of the 10 steps are the same, no matter if you're investing to invest or you're investing to immigrate.
What are some of the paths that you see people from out of the United States taking to invest in the United States? In other words, are they finding and negotiating assets themselves, or are they working with larger groups that are located here in the United States?
They work with larger groups. They're generally that's not going to work because they can't invest in a syndicate or anything like that because it's passive. So they do need to develop a strategy. They can joint venture and they can partner, but they have to own 50% of the business in order to qualify for the visa. So they need to work with a professional that can help them with that strategy. They can work with real estate coaches and investment coaches and all of that. But it's generally not part of a bigger company. It's their company. They may invest in multiple companies as well as their own investments, but at the end of the day, they need to be managing the enterprise. That's the key.
And what you just said applies to people who want to attain a visa. In
Yes.
other words, they want to move to the United States. And if they want to stay in the country where they are, then can they invest in a syndication?
Absolutely. As long as they have the right structure set up. And you're still going to want that structure to be set up no matter if you're investing passively in a syndicate or in a conglomerate or a consortium or whatever you're investing in. Any kind of investment in the US or any country for that matter needs to be done through the right entity structure and the right corporate structure. Otherwise, you're exposing yourself to a lot of potential challenges.
And for syndicators here in the United States that might be raising money to take down a large commercial property, what advice do you have for them when working with international clients?
Don't do it without the right advice. Don't do it without a professional. I'm the chair of the International Investment Committee for EXP Commercial, and I offer everybody in EXP the opportunity to consult with me to help them with their foreign investor questions and clients and so on. But, it's not the same as working with a domestic investor. There are more hoops to go through, and you want to not play lawyer ever. That's really important.
So if you're a syndicator raising money here in the United States and you have international investors, make sure you get an attorney who understands how to work with international investors.
An attorney and or a CPA, yes. And also don't just take the money. Make sure that they have the right advice or they're going to come back and try to pin it on you.
They're going to come back and try to pin what on you?
Whatever downside they have, whatever negative tax implications, whatever happens to them. If you said, just, invest the money and then they have something negative happen, they're going to try to pin it on you because they didn't get the right advice.
And that negative thing might be what? Double taxation, perhaps? Or
I don't really specialize in that, so I'd rather not comment. But yes, double taxation. I mean, they'll try to pin anything they can on anybody they can when they're doing this. Or let's say they lose money. Oh, well, you didn't tell me I needed to do this or this or this or this. So they have capital gains or whatever. You say to them, you can do a 1031 exchange. And guess what? It's not recognized in their home country. Be careful.
What are some of the mistakes you see international investors making when investing in the United States?
They don't get the right structure. They don't get the right advice. They do it haphazardly. They run before they walk. They don't have enough capital. They invest blindly. And that doesn't necessarily mean without visiting the property, but they just find something that looks good and they don't do due diligence because they don't know how, or they use the due diligence that they're using in their home country, or they think because they invest successfully in wherever that they can invest successfully somewhere else. And that's not true. It's just not one size fits all.
Any client success stories you want to share with us?
Clients come to me every day, as I say, struggling with trying to figure out where to invest, how to invest. They didn't get their visa. They were denied a visa. They don't understand how to invest in real estate and get a visa. And I help them with every aspect of that. And I have a stellar track record with every one of my clients so far getting a visa or at least some form of what they're seeking, even if they have to modify. It's just really important to go with somebody that has that experience, that understands how to shift gears, that has the superpower of being able to look at what it is that you want and help you to achieve it in the path of least resistance. That's really what it comes down to. So I had a client that came to me and she had a lawyer and a business plan writer and a business broker and a realtor, and they were not speaking the same language. And she came to me and I just brought them all together. That's really what it comes down to, is that holistic approach so that the client doesn't feel as overwhelmed. I really take the overwhelm away. So that's why I'm often overwhelmed.
Any additional advice that you want to share with our listeners on this topic?
It's like anything. Stay in your lane. Don't try to do things that are out of your lane. You will end up paying the price in spades, and you could risk a lot more than you think. Don't try to raise money from people without the proper documentation. Don't try to invest across borders without speaking to somebody that understands both sides. Don't become an international investor just because it sounds sexy. It's not that sexy when you get in trouble.
Lauren, how would someone find out more about you, get a hold of you, listen to your podcast?
My podcast is called Investing Across Borders. It's available on Apple, on Google, on Spotify, everything, you name it. And I have some pretty fun guests on there. I'm very active on LinkedIn and on social media, Facebook, on Instagram. It's Lauren_Cohen_ESQ. You can find me on pretty much anywhere and everywhere. My email is founder@ecounselglobal.com, founder@ecouncelglobal.com. And you can reach me toll free at 866-724-0085, 866-724-0085. And I do charge for consultations, but you can always shoot me a text and I might be willing to help you out.
Well, Lauren, thanks so much for having this discussion with us. I've learned so much about investing internationally from the United States. And then I think you've also shared a lot of great information for our listeners who are outside of the United States that are interested in investing here as well.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com.
And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.